So today we're going to talk about the current stock market crash going on with Celsius stock, because that stock is down massive, down 37% in the last month alone. And I've seen a lot of you guys also comment about Burberry stock, so I'll try to do a video on Burberry at some point this week as well and tell you my thoughts on that stock. But today it's all about Celsius, so I hope you enjoyed the video. For you guys that have been wanting a video on this, hit that like button. If you're new around here and you find this video helpful, make sure you subscribe and we'll take a look at Celsius. So if you've clicked on the video today, I'm pretty sure you guys know what Celsius is. If you don't, it's an energy drink that's mostly based in the US, but they have just started international expansion. It's a stock that I have owned and do own, and it's a stock that has done very well for me, and it looks like Celsius has the potential to be the next Monster Energy, which has been one of the best performers on the stock market in the last 10 years. Now Celsius itself, the stock, has had a pretty good run. If you look at from where it was at in 2020, even with the current dip that's going on at the moment, the stock is still up 1,000%, which is a very good return for the last kind of 4 years. But you can see here, the stock is down quite a bit, down nearly 37%, as taking this from today, having a bit of a major drop. But Celsius has historically had these sort of drops before. You can see there was only one in March time where it was having a 21% dip, and even during 2022, 23, you got another 26% dip there. You got another 22% dip there. Obviously the one that got me to start buying was this dip from 2021 into 2022, but there again, nearly everything was crashing during that time. But that's when I first started buying the stock, on that 58% dip. Now obviously from that time frame, I own the stock and I sold it for a good amount of profit. You can see here back when I was posting videos on Celsius 2 years ago, 3 years ago, talk about buying the stock. I bought it, I sold it, and then I have recently bought back in. So with the drop that it's currently on, I'm actually about break even on the stock at the moment, but I'm still a big fan of Celsius even on this dip at the moment. And I would say that even though it's having a dip at the moment, I would still say the stock, in my opinion, is still significantly on a uptrend, as you can see here at the moment. But let's take a look at why the stock is currently dipping at the moment. Well, first of all, there's a few negative stories out there with people saying that Celsius made them ill because they drank too much of it, which is, you would think it was obvious that you can't have more than one can a day, but people still go do this and then they get ill and go, oh, this drink made me really ill. It's absolutely crazy that we have those sort of people that still don't have that knowledge that you cannot do that, otherwise it will harm your body. I mean, it is one of the reasons why I think we have caution hot on our drinks when we go get a hot drink nowadays, that we need that on the packaging to not that we haven't already realised it's a hot drink. But yeah, it's so any sort of news stories on people being made sick by Celsius, or there's some sort of ingredient issue, this isn't a really big issue to me, and I don't think this is actually something that's affecting the share price. In my opinion, the reason why Celsius is having a drop at the moment and having this drop is because of the weak data. Now we saw this in Q1 earnings came out and they were a little bit weaker than what we expected. At the moment, a lot of analysts at the moment are starting to cut their Q2 estimates because they're saying PepsiCo are reducing their inventory. Now in case you don't know, Pepsi own a stake now in Celsius, and they also ship the inventory for Celsius as well. Obviously a very good distribution network right there. Because Pepsi get the stock in from Celsius, they're saying that at the moment Pepsi are ordering less stock from Celsius at the moment, and that's because potentially there's a weakening in the demand. I personally don't think there's a weakening in demand. What I think has happened is that Pepsi have maybe ordered a lot of cans at the moment, and now they're trying to cut their stock down at the moment, and that's why we're seeing these big fluctuations in the inventory issue, and I think they'll stabilize over the long term. I still think, even though the financial year revenue estimates are getting reduced slightly at the moment because potentially Pepsi have overstocked, I think there's no damage here in the long term with Pepsi in Celsius. I think it's just Pepsi trying to get the right amount of inventory in here when they've gone from nothing to trying to get as much stock as possible to fill all the fulfillment networks, and now they're just trying to stabilize it a little bit. I think in the long term, and if you look at analyst growth targets still at the moment, I mean, they're expecting current year 29% growth this year, and even next year they're expecting 28% revenue growth, which is still, in my opinion, is absolutely fantastic growth, and I don't think there's any slowdown in Celsius. You look at the market share they're taking, it's still taking big market share. And from a profitability point of view, the profitability is still moving up a lot as well. And my big thing is that, you know, Celsius is still in its early days. We've seen them basically take over the US. They are now coming for Monster as the leading energy drink supplier. But now you talk about a company that is only just starting that international expansion. if you imagine that Celsius are able to do what they do at the moment in the US, and they now take that to Canada, the UK, Ireland, I think later in the year, I think by Q4, we have the New Zealand, we have Australia coming up as well, France, I believe. This is not a time you want to be selling the stock when they've just started this international expansion. In my opinion, this all the growth numbers I have at the moment has come from fantastic growth in just the US market. You now start adding this international expansion on top. I don't know why you'd want to sell at the moment, because they're only just getting started with some of this growth. I mean, if they are able to replicate that in other countries, it's going to be a very exciting time for Celsius. And as well, at the moment, what has happened is Celsius actually pushed to one of its lowest valuations for a long time. Now, it has only recently started making profitability, but even on the PE ratio now, it's down to the lowest PE ratio that it's ever traded at. And you look at the company's growth, and it looks like it's still set for major amounts of growth, as you can see here. Very good profitability. As they're scaling up as well, all we're seeing is the profit margins increasing. They've now got to a 15% profit margin, and as they scale up through that international growth, I'm sure that's only going to get better. You're sitting on a company here that now has a fantastic balance sheet as well. They've got no debt on there. They're generating this amount of cash. They're sitting on now 879 million. They're going to have options with that cash. I don't think it'll go to a dividend, but they have the option to maybe share buybacks or something further down the line. And I think the company's still in a prime position. I think that we're just seeing the kind of balancing out from some of this inventory from the PepsiCo deal. And I think in long term, definitely the game plan for Celsius is nowhere near intact. And now when we talk about Celsius, for example, it's now trading down at 66 times earnings. And obviously this company is growing really fast, so it's going to grow into that valuation really quickly. And you look at something like a Monster, for example, which is still years ahead of where Celsius is, and yet they're still growing like 10% a year. So it shows you that even in the next 5-10 years, this company's still going to be growing probably double digits like what Monster is, and the EPS is still ramping up. And yet as well, a company like Monster and Pepsi, they trade at premium valuations. They're seen as very defensive stocks, that are very safe stocks, because even in a recession time frame, you're still going to go out and go buy your food, you're still going to go buy your drinks. So it's something that's probably not going to be a very premium valuation. And you look at something like Monster, for example, and Monster's currently trading at a 30 times earnings. Now, we just showed you here, Celsius is now down at a 66 earnings, but when you look at Celsius, you've got a company that's about to grow EPS rapidly, and is a company that's growing 3 times what Monster is, which kind of shows you that maybe Celsius now has fallen to a bit of a lower level. When you're only paying double the premium on Monster for Celsius, but yet Celsius is 10 years earlier than where Monster is and got a lot more growth, maybe there's some kind of form of disconnect going on here with Celsius. And for me, I look at the drop at the moment and I feel like, yeah, maybe we just went up a little bit too much. You look at that sharp bounce up here that we had on the share price where the stock was up, nearly 74% within 2 months. Maybe we just went a little bit too far ahead of ourselves. But the long-term game plan, in my opinion, on Celsius is still very much there and alive, and it's set to have a good future. And I'm looking at this pullback going, okay, maybe we're having healthy pullback, but actually maybe this pullback's actually now turned into a bit of a buying opportunity, because there's no way Celsius should only trade at double the premium to Monster when it's growing triple what Monster is. And obviously it's going to grow into that valuation a lot quicker with its growth rates. So what I thought I would do is actually look at some numbers. Obviously rather than telling you what I think, let's actually look at some numbers. So I had a look at some numbers, and this is the first time I've updated this Celsius slide for a long time. I think the last time I did this Celsius slide was back in 2022 when we were selling the stock out for when we started buying in 2022, and then obviously we started selling it for a 100% return not too long ago before we started buying back in. So if I have a look at some of the numbers here at the moment, I've got 20%, 22% and 24% revenue growth over the next 5 years, which I think is very fair, because if you look at what the analysts are currently forecasting, they're growing at high 30%, and maybe they get upgraded towards the end of the year. We'll see what happens, but you can see I'm being a little bit more conservative to what they are currently doing by a fair amount. Obviously, I'm also taking in some slowdown. I don't think they'll grow that high, high 30% in year 2027, 2028, so that also factors some a little bit bit of that in there. Profit margins gone 15, 17, 19%. They're currently doing 15% profit margins, but as we see them scale, potentially they see them profit margins hike up a little bit. And at the moment, I've got a multiple of 20 times earnings. Now, I think when you do, if you're doing these profit margins and this growth, you're not going to trade at 20 times earnings. You know, we see Monster's currently trading at 30 times earnings. Celsius is already currently trading at 60 times earnings, so I don't think we'll trade here. Now, if they don't have multiple expansion and they contract, then there isn't much upside on this business. But like I said, I think this company is going to trade at a premium. If you're doing these numbers, I think you trade at a premium. Obviously, it's trading at 60 times earnings, and there is that element of risk there that, you know, it's not good to assume that it trades at premium, but I think it will do. And when we actually start looking at Celsius, and let's say, for example, the company starts trading more towards a 50 times earnings multiple, which is still below what it trades today, by the way, but let's just assume that it's a bit more of a premium. There's clearly over 100% upside still in the stock when, if it was to trade at that premium multiple like it does right now, which I think it would do with those numbers. And that shows you that, in my opinion, I think this has still attractive upside. Now, the other big thing is, let's say the profit margins expand because of the scale that they currently do. And let's say the company holds up to a higher end of a 20% growth. Let's say as well as that, the company assumes a little bit more of a premium. It's not only 50 times earnings. Let's say the market goes, you know, we actually really like this stock and it trades at 65 times earnings. There's a lot of upside on the high side. But like I said, I'm not assuming that it's going to trade at that big massive premium automatically. I'm going to be a little bit more cautious, and when I'm a little bit cautious, I think 50 times earnings with 24% revenue growth, 90% profit margins, I think there's tremendous upside still at Celsius at these sort of levels. So when I look at the dip on Celsius, I think, yeah, it might be a healthy dip. I think it might even have gone into a point of view where Celsius is now an overreaction and actually a good buying opportunity. And for me, I do look at the stock at the moment and think, yeah, you know what, I think it's a good buying opportunity, and you probably will see me buying up Celsius stock on this drop at the moment, in my opinion, because I think the drop is a little bit overdone at the moment anyway. So yeah, a little bit of thoughts on Celsius at the moment. Yeah, I think that the drop at the moment is an opportunity, and personally for me, I will be buying that opportunity at the moment anyway. Hope you enjoyed the video. If you could hit the like button, if you're new around here, subscribe. Let me know what you think of Celsius in the comments. Are you currently buying the stock? Apart from that, I'll see you all in a bit.